Hello everyone, this is Max. You're watching EquityMatch online live pitch event. Today I'm taking this pitch event from Malta as we are close to the EU Summit and we have four great founders, as always, pitching today a one amazing investor guest. So without taking too much of your time, let me move to our investor guest, Nelson Daniel Lopez. Nelson, first of all, thank you so much for coming.
Hi, everybody. Great to see the new faces here. Great to see you again, Massimiliano.
My pleasure. Please, if you want to give an introduction to yourself, and after we move to call our funders.
Very good. Thank you so much, first of all, for the opportunity without taking up much of anybody's time, because today is not about me. It's about the amazing founders that are here. My name is Nelson. You know this. I am the CEO of an accelerator operating in the Web3 and AI space, a couple of other narratives as well. I've been in contact with founders in tech and startups since 2013, mostly working in leadership development, building teams and organizational design. This led into advising for startups and founders full-time. Must have done so for over 50 now. This led into advising for VCs and accelerators at some point of my life. I later led two major crypto exchanges. And today, I think, is the highlight of this journey, which is being here with everybody as an investor, which is the narrative and the vertical I've been mostly dedicated to over the past 5 to 6 years. So that's it about me. Happy to find out about our guests today.
Thank you so much, Nelson. So we did the mentor talk, we did investor talk. Today we do the pitch event, so we close everything.
Absolutely right.
Thank you so much for your time. Let me move to our first founder, Vince Membanze. Vince is the lead scientist and founder of NextNode. Headquarters is Johannesburg, South Africa. The sector is fintech, deep tech, macro analytics. It's a pre-seed of $500,000 in USD. How's it going, Vince? Yet on mute.
Can you hear me?
Yes, of course.
All right, great. So in 2021, a whistleblower was assassinated for flagging corruption at Tembisa Hospital, and by 2025, it was uncovered that over $100 million was siphoned from the hospital into unproductive investments like houses and cars. And so what happened at Tembisa Hospital is an example of there being poor transmission infrastructure. Hi, I'm Vincent Banze, founder and lead scientist in NexusNode, and the Credit to Investment Transmission Index is the start of that infrastructure. So in BRICS Plus and emerging markets, we see a lot of money enter the financial system, but it often fails to properly build industry. We call this the capital leakage problem, where we see capital sit in unproductive debt, and it creates a blind spot for investors who see the volume of money, but not its efficiency. So without transmission metrics, investors can't see the difference between a market that is risky and one that is just unreadable. And so NexusNode provides the solution, a live tachometer for capital efficiency. By quantifying the transmission gap, we switch the lens from how much money is moving in the system to how efficient is that money into turning into industrial output. And so we provide that standardized index that alerts institutional investors when a market's credit is successfully transforming into industrial growth. And so we've got a four-layer engine, four-layer architecture. We start off with layer one, the macro ingestion layer, where we map each nation's transmission baseline. And then we move over to the transmission pulse, which is the decoupling signal, right? It tells you, is the amount of money moving in the economy equivalent to the actual growth that's taking place on the ground. And so layer three becomes the point where we hash each signal onto a Merkle tree for auditability. And layer four is the final metric output. And so we are targeting a global demand, a massive demand for global alternative data, and it's projected to reach about 168 billion by 2034. And based on the Institute of International Finance, we're looking at a serviceable addressable market of 455 million US dollars, and targeting just 0.5% of that. It's 2 million annual recurring revenue for the serviceable obtainable market. And so, who's interested in this signal? Well, hedge funds who are interested in tradable alpha, and this one is particularly important, fintechs who need help in lowering the wholesale cost of capital. I mean, if we could just lower the cost of capital by 100 to 200 basis points, that could mean a lot. And finally, developmental finance institutions that need help in validating infrastructure impact and capital flow repairs. And so we lead with some traction, right? And so we signed a memorandum of understanding with Raise Corp for some early stage business development and incubation, and then we presented our project at the BRICS Plus Youth Innovation Summit in Pretoria. Out of 850 applications, only 50 projects were allowed to come pitch, and we are part of that 50. And we're going to be presenting the same project at the African Data Science Conference at Wits University, oral presentation. And another one of our projects is going to be, we're going to be presenting it at the World Congress on Public Health in Cape Town, again, an oral presentation. And so we're also going to be at the Corporate Social Investment Conference later on in July, and at the 10th East Africa Philanthropy Conference, and the MVP itself is live. And so we're looking at our business model as data as a service, particularly the core engine being API licensing, custom pricing, looking at direct data feeds for quantitative trading desks and systemic funds. And when we look at companies like Bloomberg and Refinitiv, you know, their advantage is what, I mean. So they look at market data, and rating agencies are particularly good with creditworthiness, right? And we're trying to measure systemic velocity. How is the money moving? And so we're looking at raising 500,000 US dollars. 60% of that is going to go into engineering, 25% to expansion, and 15% into operations. And then our team blends a mix of quantitative edge and commercial strategy with backgrounds in system science, computer science, and executive strategy. And so Africa is ready for capital that actually works and is efficient. Join us at Nexus Note as we build the future. Thank you.
Thank you so much, Vince. I leave everything to Nelson.
Thank you so much, Vince, first of all, for your presentation. I really like that you're confident. I feel like you could have said this presentation without looking at the slides. It comes off really natural, and I appreciate that. Very good. I have a couple of questions here that I was noting down as you were speaking. So starting from the last one, you mentioned Refinitiv and Bloomberg. The CTI index obviously pulls from publicly available data, which Bloomberg also has access to. Not what stops, but what's your plan if and when Bloomberg come out with, you know, a similar product the moment yours starts getting traction? What's your plan from there?
With regards to that, it's, of course, you have to own some sort of infrastructure, right? Mm-hmm. So with the zero knowledge proofs, we're trying to work with infrastructure that you can audit, pipelines that you can actually audit. Mm-hmm. And so we're going to be auditable without having to require investigations. You know, when auditors want to look at the data and your calculations, it has to go through a long process. So with the zero knowledge proofs, and the ED 25519 signatures, as well as the Merkle trees, we want to be auditable already without having to go through the process, the unnecessary processes of investigation. So just by building the product itself, it's going to be auditable by design.
Okay, I understand. This is a follow-up. I understand the interest of ZK proofs, obviously, but have you checked? And if yes, that's great. And if not, that's okay too. Have you checked if actually that solves any problem for your clients that, let's say, traditional cryptographic audits don't solve? Like, are your clients asking for this, yes or no? And if so, what problem does going through the ZK proof route actually solve? for them, for the clients?
Well, I haven't really looked at that yet.
Okay,
But the
that's
main
fine.
problem that is okay.
Go on.
Okay.
If you have something to add
The
on.
main problem that we're trying to solve, the auditability is a bonus, but the main problem we're trying to solve is that cost of capital. As I said, by just lowering the cost of capital by 200 basis points for fintechs who borrow money to the informal economy, that's where the unbanked and the underbanked lives. We can, prove that South Africa is worth investing in and lower just the cost of capital.
Okay, good. My one point here would be it's important when you're launching a product, and a lot of people, I say this to everybody, not you specifically, it's important to not lose track of every penny and every hour of our energy going into something that solves a problem for the client. Especially in blockchain, it's easy for us, and I'm guilty of this too, to get kind of attracted to the latest bleeding edge technology of what can be done. It's important to continue asking ourselves constantly what should be done. So not going into avenues that don't solve a problem for the client. But I like the general direction you're going. I was just kind of challenging you on here on how sustained it is. Another question which is important because as an investor, I'm always looking for long-term relationships, and I need to see a path to getting the money back for both of us. You mentioned having an MOU with, I made a note here, Race Corp, and also presentations with BRICS Plus at Wits University. That's great. Those are great for traction, but they're not synonym to distribution or commercial signals. Are you working in parallel with any commercial agreements, with any letters of interest from people who say, once you have an MVP, once you have this ready to serve my problems, I'm ready to sign and onboard this product? Or for now, are you focusing more on the traction side of things, to presenting at BRICS Plus, having an MOU with Race Corp, and so on?
Yeah, I mean, at this stage, the social capital has been really hard, just to try get in front of specific customers. So right now we've been focusing on the traction, and then once we've developed the rapport through some research and some papers, then we'll be able to have that edge to be able to approach the specific customers with and refine the solution for their specific problems.
Okay, clear. The last point I had here is, because I really like your product, I can see several applications for it, and I just want to see if you're thinking of one lane in specific, or if you're going to kind of all directions here. So I can see how sovereign wealth funds can use this. I can see how development finance institutions can use this. I can see how hedge funds can use this as well. Are you targeting a specific vertical for this to kick it off with, get a nice use case before going into the market, or are you kind of ready to deploy to any one of these three verticals if they approach you and they're ready? Because depending on your answer, I might also make introductions for you if that helps.
So the first go-to market for me is the fintechs.
Okay.
Companies like YOLO and the Vodacom and MTN. They're the ones who actually deal with the customers in the informal sector. So by first getting a refined solution for them, because we're trying to deal in the informal sector, by refining the solution for them, then we can go together with them to the DFIs and the central bank to say, our solution lowers the cost of capital. Can you please lower the interest rates because we have the proof? And so I want that to be the first step. But if other means are available, we could go the other way of going directly to the DFIs. But the people who are on the ground, who deal with the people in the informal sector, are the fintechs.
Okay, clear. Thank you so much. Look, I think you have an amazing market waiting for a product like this. I personally am a fan of what blockchain and even AI can do at the coordination layer side of things. So I think you're onto something really great. And thank you so much for your exposition. I want to follow up, but let's keep this show on the road. Thank you so much, Vince.
No problem.
Thank you. Thank you so much, Vince. Nelson. Let's move to our founder number 2. Marcelo Madeira, founder and CEO of D2I Port at Portis, Florida, US. Travel Hospitality, a pre-seed of 100,000 USD. How's it going, Marcelo?
I'm doing I'm doing very well. Thank you for inviting me again, Max, and pleased to meet you, Nelson.
Bom dia, Marcelo.
To be here. I am a Christian, a family man. I am a sales executive. I worked for over 30 years for B2B sales in multinational American technology companies. I founded another company, a service technology company. I co-founded a mining company in Brazil, and recently I co-founded a AI company in Rio. And I am the founder and CEO of Dito Airport, and I love sports. I competed in Hawaii pipeline as a professional bodyboarder in my previous life. Okay, let's do it. Okay, started. So Dito Airport is, the concept is simple but powerful. So let's move. The baggage check-in at the airport is a problem. I'm not only on saying that. International Air Transport Association, IATA, conducts a global passenger survey, and the 2024 points that 36% of the passengers want to execute the baggage check-in before arriving at the airport to save time. It's a real problem. So we have a solution for this problem, of course, to check in the baggage outside the airport. And we also offer another solution, is the baggage handling. And mostly we give back the travels day time. And they can enjoy the travels day, going to a fancy restaurant, on go shopping or whatever. And we have a unique solution in the market approved by the TSA. We offer a bag tracking so the customer can see the baggage flowing from point A to point B, of course, to increase their customer experience. The market is enormous in US. We are talking about 1.3 billion SAM, and we want to catch 4 to 5%. How it works? Simple, 3 steps. You book the service. We go there with a van and we execute the whole baggage check-in process. We act as an airline or cruise line agent, but outside the airport. And you can arrive at the airport later, not late, sorry. So you can enjoy your day. And we have an app, web and mobile, and also we offer flight information, online flight information, and a chat support with a chatbot with AI, and also people to take care of the second level. Okay, we proved the concept in Orlando International Airport with Azure Lines, and also we are proud to say that we became a official tour operator of Royal Caribbean Group, the third cruise line worldwide group. So regarding the pilot with Azul, we have in only 2 months 1% of adoption. $116 on average ticket. So they invested money and they love the service. And this is good because we validated the project and the product, and also we could be able to expand to the cruise lines. So our business model is a B2B2C. So we have a near zero CAC, and that's why we got 1% of adoption just 2 months. And the partner, we bring to them ancillary revenue. So we put our price and they put a markup. So we get a senior team. That's why we executed the Azul project in only 5 months, an innovative one. And now we are ready to execute a pilot with Celebrity Cruise. Celebrity is a luxury brand of Royal Caribbean Group in Port Everglades, Fort Lauderdale. They're expecting 5% of adoption. We will take care of 4,000 passengers and having 100K of revenue. And of course, the idea is to expand this pilot after the 3 months for 5 more Celebrity ships in Fort Lauderdale, Port Everglades, and 1 ship in Port Miami. And of course, we can attract the airline. JetBlue main hub is Fort Lauderdale, so we are talking with SITA, one of our technology partners, to engage JetBlue, because Celebrity is just the baggage handling. But of course, we can evolve in a fast manner to the airport baggage checking. So we are asking 100K. We are giving a 25% discount, convertible safe. So instead of 3.45. The investor ownership is 3.44. And basically, to execute the pilot, of course, we will generate revenue and then expand. So in summary, we are solving a real problem with a unique service in US, official tour operator of Royal Caribbean Group, the third one worldwide, the pilot with celebrity, and that's it. And we are ready to scale. The digital platform is ready. Everything is ready. The contracts with HR companies, technology partners, and we are ready to go. Thank you very much for your time.
Thank you, Marcelo. Nelson.
Thank you. Okay, cool. Couple of questions as well.
Sure.
Starting with the last one again. You mentioned that your CAC is near zero because all of your customer acquisition is partner-led. I understand there's a mechanism for them to be rewarded somehow, but what this also tells me from the risk management perspective is that mostly your customer dynamics will be dependent from your partners. Do you have any contractual or any other mechanisms that protect you from your partners suddenly dropping you from their partner list and going and onboarding somebody else who's doing the same thing at a for a bigger slice of the pie?
Yeah, great question. Yeah, we signed a contract with the partners. We signed a partnership contract with Azul, and we are on the marketplace of Royal Caribbean Group. But for them, it's hard to substitute if you deliver a good quality of service. Actually, we have a main competitor in US is Bags Inc. Bags was acquired in 2018 by $289 million for SP Plus as a service company, and we beat Bags with Azul because Azul tried to execute the project with Bags without success. They didn't acquire the approval of TSA, and Bags used to serve Royal Caribbean Group, and we are replacing them. So I think the magic trick is the quality of the service, the staff, the digital platform, because we offer a good quality for the passenger, online flights, and it's hard for the companies to do it itself. It's the outsourcing is their mantra. I mean, and the competitors are not worried about the competitors because we won our main competitors twice in a row. So I'm not being arrogant, but we studied a lot. We have the manual, the procedure, the security process. That's why we're approved by the TSA, the tracking of the luggage. And the partner, we bring to them ancillary revenue because we put our markup and they put we put our price and they put their markup. So okay. Very important both for airlines and cruise lines, the ancillary revenue.
Understood. That also poses a risk there because at the end of the day, if your customer, if the C part of your B2B2C feels your cost is too high because of the markup your partners put on that you don't control, it's easier for somebody to come in with more aggressive B2C campaigns directly. And ultimately, I think there's more dollars in non-premium customers, especially with this new generation of people who want to do anything online. I imagine very easily anybody below, the age of, not make it about age, but below the age of 30, anybody will want this. And there's a lot more customers in that non-premium market than the premium people who want the premium experience of traveling. So the markups there might be a risk, but I understand the mechanism you're on. One question I also have.
Just to compliment you, because it's very important. Our focus is on the VIPs. A cruise package is $5,000 per person. We are charging $25 per passenger. So if celebrities put double, $50 per passenger, they won't feel it. Yeah. And
I understand. I'm saying as a business, there's probably more money on the table for you to get from non-premium customers because it's millions of people paying less than having a lot of people. I understand there's also branding value in being a premium service. But in terms of money to be made, which is revenue, it's what makes a business, not a pride project. In terms of revenue generation, there's probably more money for you on the table in non-premium customers, which is in the millions.
Not necessarily, because the cruise, because you are focused on the air cruise customers.
Correct.
It came by plane, and so that's the customer. Because the baggage check-in, we need to go to the cruise flying, and the ship cruise is not our focus, and also not the low cost airlines. It's an important point. 30% of the seats, on average, for the top airlines in US are for economy, premium, and business, etc. So they are targeting the premium also, not only us, because economy premium lets on the table $2.75 on average worldwide. I mean, economy ticket. So they are desperate to increase their seats to VIP, economy, premium, to bring more profit to the company. So
okay. One curiosity, and then I have my question, and I'm conscious of time. You mentioned partnership with the TSA or approval by the TSA. That's huge. Does that mean automatically access to every airport, or is it still under the jurisdiction of every airport to offer your service or not? And the TSA just kind of gives you a background approval, but then that does not mean automatic entry into the airport services and logistics.
Yes, a great question. Yeah, every TSA has a team in each airport of the US. Okay, correct. So we are approved by the TSA team in Orlando, but we have the cakes recipe. It's the same thing. And actually, the airline, they will deliver our process and manual and procedure to the TSA, because the airline, they have a security plan, and we created and wrote in the amendment of this security plan to allow the off-airport baggage check-in.
Okay, clear.
It's
another
easy
point
to be approved because we were approved. So it's just a matter of talk with the team, and they will audit us as they did in Orlando. And
okay, clear. Another point I mentioned here, just on the topic again of looking for long-term relationships and how founders can stick to the path they track, which often, look, it's okay. I expect reality to be different than what we're all hoping for in a pitch moment. But you mentioned here, I'm looking at your deck, that the Azul Airlines showed, I think, 1% adoption. This is in 2 months, correct?
Yes.
And you're projecting the Celebrity pilot at 5%. That's 5 times what the numbers you have today. What mechanisms, or what are you basing off of specifically to land on this 5% number? And what's your contingency plan? So what are you going to do or change or adapt if you also land at 1 or 2%?
Okay. Actually, we are waiting for 1%. But Celebrity told us that probably will be 5%. Remember, they already promoted this service with our competitor. And Celebrity is a luxury brand from Royal Caribbean Group, so high tickets. And but of course, my business plan comprehends 4% in 5 years. But the cruise is like different from the airlines, because again, the ticket is much higher than airline ticket, and $25 is not a big deal. And they will promote the service for us on its app. And of course, they know probably they will be pretty much right about the 5%, because a ship is 3,000 people. So 5,000 is not a big money, a big deal for a big volume. Sorry, for 3,000 people. 1% in 300 people is different, but you know the volumes are different. But yeah, we are waiting for 1 to 2%. That's why I'm asking the money for contingency plan, and we are also the 10% working capital to be ready for. But you know, I don't have capex. I release the vans, I rent the vans. I use a self-storage in a nearby Fort Lauderdale in Port Everglades. So I have a company to contract the staff and pay them for me. They put just a markup. So everything is OpEx. I can diminish scale, grow, or reduce the team and the vans anytime. So
okay, clear. Thank you for that. Look, I think I have a really cool product here. I would for sure be a customer on my side. I value my time at more than $25 an hour, so I would happily pay $25 to not be anywhere for an hour managing luggage. So I definitely see the value in the market here. Thank you so much for the presentation today.
Thank you, Nelson. Pleased to meet you. Thank you.
Thank you.
Thank you, Mascaro. Thank you so much. Let's move to our founder number 3. Marco Pari, co-founder of Neurality SRL, Rimini Italy, AI Industry Automation, is a late seed of 1.5 million euros. How's it going, Marco?
Thank you very much, Max. Happy to be here. It's going great.
Thank you so much for coming, and please, the stage is all yours.
Thank you very much. Thank you for your time to everyone. My name is Marco Pari, and I'm here to show you why, when it comes to the results that we can bring to the manufacturing quality, you won't believe your eyes. In Neurality, we are redefining how the world sees production. In the modern manufacturing, much of the visual quality control is still handled by human operators. This creates a massive bottleneck. The results are subjective, skills are difficult to transfer, and it leads to extended timelines. And what's our solution? A customizable artificial intelligence platform that solves every vision-related challenge. By moving from manual to automated AI inspection, we enable a process that is 20 times faster. We provide measurable metrics, and we deliver significant savings in operational costs. What makes Neurality different from the competitors? Most AI solutions take months to be set up. We reduce that setup time from months to days. Our platform offers an optimized UI for the shop floor, and we have several solutions from a non-training solution to anomaly detection that has a worldwide record of a full AI training in just 2 minutes. On top of that, we can work with any acquisition hardware, RGB cameras, X-rays, or even a smartphone. Compared to giants like Siemens or Cognex, Neurality offers the unique combination of high flexibility and easy-to-use platform that requires no expert help. Our traction is proof of demand. In 2025, we reached 4,300,000 euros in revenues, a 20% year-over-year increase. And our sales pipeline for 2026 is already reaching 1.2 million euros. We are already serving world-class clients like Stone Island, Leonardo, and Mutti. Our revenue model is built for scale. We require a recurring annual license and a one-time fee for customization for those in need. We scale vertically and globally. For every solution that we develop, we are able to scale internally to companies and scale worldwide to their competitors. For example, in the food sector with Mutti, we have grown from 3 sampling stations to a projected 20 lines by 2030, with a potential of CLV of 15.1 million euros. We are replicating the same success with partners like Decathlon and SCM Group, tapping into global markets. In here, you see fabric automation, where we can scale to global leaders like LVMH, but also into wood automation quality control, where we can sell to big companies like Georgia Pacific. Today, we also leverage this stage to present you our brand new product. We just launched a specialized automatic machinery inspection tool that requires no training and no setup at a fraction of the costs, as easy as setting up a new Netflix account. We are targeting our 18.2 billion serviceable obtainable market across Italy and Germany, with plan to extend to the rest of Europe within next year. To capture this opportunity, we are opening a 1.5 million euros investment round. We have already received 150K and secured another 250K euros from our friends at Forward Factory. And we will use these funds for mainly marketing and sales, but also R&D and operation and customer success. Our team combines deep expertise in computer vision and software architecture. Between my background at Huawei and DataLogic and Michele's research in automated procedures, we have the technical DNA to lead this market. Join us in making neurality the new standard for industrial vision. Thank you.
Thank you so much, Marco. Nelson, it's all yours.
Nelson, I think you're mute.
You're muted.
Grazie, Marco. So I a bit of a background. One of my first jobs was at Continental, the automotive engineering company. So I know for a fact visual inspection is a huge part of any manufacturing process. And the stakes are very high because, you know, these multi-million-dollar companies, they're liable if an accident goes on the road. The tire can be tracked back to the very person who inspected the tire and so on and so forth. So I definitely see the market you have here. I'm also happy to, I don't know if you're in touch with them or not, but I'm happy to introduce you to some of the heads of engineering at Continental. I think probably you can get a pilot going there or something along these lines. I'm more than happy to extend that. So quick, 2 or 3 questions I also have. Not about the product. I understand exactly what you're trying to do, how you're trying to do it. That's almost native to me. One thing I'm curious about, the training time. You mentioned 2 minutes. How do you, without going into too much detail, how do you do it in a way that I think Siemens, Continental, for example, other Kians I know is Cognex you have on the files. How, from the mechanics side, are you able to do it when these much bigger companies putting millions literally into R&D have not been able to? I'm genuinely curious.
Nelson, you are asking for a secret sauce, basically.
Okay, cool. I respect that.
But that's basically our know-how and how we can keep the competitive advantage in a market that is filled with competitors. Okay. What can I share is basically we don't want to compete with architecture model developers like Google, Facebook, and so on and so forth, because our structure is modular. We take a backbone that is taken from the open source community, but from our perspective, it's just a module. Mm-hmm. The moment that a more performant model comes out in the wild, we can easily swap it in and test it against the benchmark. If we improve our performance, we can just deliver to our customers.
Okay, understood.
The secret sauce is the top of the model. So how we perform the training and is able to perform in under 2 minutes. The under 2 minute solution is actually an anomaly detection model. So we only use compliant product image to train our model.
I was going to say, it's harder to acquire some of these enterprise customers because if they buy you as a service provider, they want liability assurances, and you cannot just point to an open source model on GitHub for something that's ultimately, let's say, visually inspecting tires that can blow up on the road and somebody dies, and then it's back to the service provider. So the fact that you're using compliant models, it's good. If you want to make it proprietary at any stage, I encourage that. But big enterprise customers like Continental or Siemens, they will want to look under the hood, but just get them to sign an NDA and you should be okay. Okay, cool. Thank you for that. Really, really interesting. Second question I had here. Yes, your ARR, you mentioned is 82K against a 610K pipeline. You have some big logos there. I think you mentioned Decathlon, Chanel, Kraft Heinz, all of this. What's your expected conversion timeline to these logos on a deck becoming actual customers with a letter of intent or actually becoming like paid? So I understand obviously it's not a conversation that's, conversion isn't there yet, but what's your expected conversion time between now and actually acquiring some of these customers? So do you have the structure set up? Do you have the funnel set up? Do you have the team set up to also onboard them? Do you have kind of the account management mechanics behind that too? So kind of what are in your head, what's the math for the time line between having these people as probable customers to actually having a letter of intent signed by them. So how soon, if somebody wants to invest, how soon, basically what I'm asking you to make it simpler, for somebody wanting to invest, how soon do you think it's realistic to say these big names will be paying customers?
2 years.
Okay.
From the moment we receive the investment, we focused just a couple of years, because what we lack internally is the ability to reach out to international big players. Like we showcase the huge names, but 99% of those names are Italian companies, and having to deal with Italian customers it's a tough market. They tend to be old-minded in the servitization paradigm, so they rather pay a huge initial amount, and that's it, and they own the technology rather than pay for a service. Okay. So we are trying to enforce that kind of reasoning. We are trying to do it locally so that we gain the traction to both build vertical product that can ease the entering into a market with a ready to ship product instead of developing a new one. Also to have the backlog to showcase to customer, like for tomato sauce producer, food, or like you mentioned, for fabric producer and so on.
Clear. I agree with your analysis. One thing you do have in your favor in terms of selling this as an ongoing service and subscription, even rather than a one-time service, is that it's AI based, and every 2 weeks the technology is new. So if you sell something today to an old-minded company, 2 years from now they'll have an outdated product, 2 weeks from now even. But the argument is you can buy from me a product today and it'll be outdated 2 weeks from now, and your competitors won't. Or you can buy the subscription, and it's on me to constantly make sure you have the latest product available. So that's an argument you have in your favor for the subscription-based model, which makes you more sustainable, having this constant revenue generation, which is important for legacy-minded. I know exactly what you mean. Okay, very cool. Thank you so much, Marco. Really interesting project as well. Appreciate your time.
Thank you. My pleasure.
Thank you so much, Marco Nelson.
Thank you.
Let's move to our last, but of course not the least founder. Shama Mehta, founder of Aurora Life. Headquarters is Mumbai City, India. Lifestyle D2C seed of 200,000 USD. How's it going, Shama?
It's going great. Thank you. Thank you for having me.
Hi, Shama.
Thanks you for coming. Please go.
Just Aurora Life. I'll just quickly tell you a little bit about myself. Hi, I'm Shama Mehta. I've been in the corporate industry for the last 20 years, and I've been in the creative space, worked with Star and Sony, seen the digital advent in India, and now I'm taking my passion of creativity into a business, which is Aurora Life. Aurora Life is a curated premium lifestyle destination for Indians across the world. The tagline says it best, bringing beauty to the world. Currently, the problem that exists in India in the online fashion space is a lot of products are available which are mass and generic in style at extremely low pricing. This is exactly the gap that Aurora Life aims to close, providing international quality standards at affordable prices. Our product is currently live via a website, which is live on Shopify. It's available pan-India. We also have customers interested from US and UK. The local products, which is the Indian ethnic wear, saris and salwar suits, are largely sourced locally. We also have makeup, which is a tie-up with the Koreali app available at the back end of Shopify. And the Western wear comes in from our suppliers, our sourcing agents in China, as well as a couple of partners in US and UK. Who are the adopters of Aurora Life? It cuts across age groups. It's the college students aged 18 to 24 who are impulsive buyers, Instagram natives, as well as the urban Indian woman aged 25 to 45 years. She's the office goer. And there is a spike in shopping during the festivals, 3x or 4x the spike. There are more than 500 million Indian women shopping online in India, and 62% of them prefer Indian ethnic wear, and there is a 35% repeat purchase rate. The market size is huge. It's $59 billion, which is the total addressable market, with a serviceable market of $12 billion. And I am aggressively aiming for $80 million in the end of 5 years. Currently, we have 650 plus products that are live on the website across 7 categories. The average order value in Indian rupees is 2,300, and the approximate gross margin is 55%. By the end of 12 months, by December 2026, I am aiming at 500 products monthly with Indian rupees 12 lakhs in revenue, as well as 50,000 Instagram followers. The online spaces in India is growing by leaps and bounds since COVID, since 2020. And there are a few large players like Indian players, Nykaa and Myntra on one end, and the other end are the fast growing local players, individual mom and pop stores. Currently, I'm seeking $200,000 in USD, which a chunk of which, 40% of which, would go into marketing and acquisition in digital marketing, 30% of it in inventory and procurement. Tech and platform would be 10%. Handling the operations, the back end, vendor management for team and operations would be 12%, and working capital of approximately 8%. So please join us in building Aurora Life.
Thank you so much.
Thank you,
That's
Sham.
cool.
Thank you.
Really cool. First of all, very clear, let's say, user journey here. It's very clear where the customer gets, what they're looking for, what they get from you, and what the value is drawn. So very, very clear. I can see. I think you're an example of one thing I do like to see, which is when founders are trying to solve a problem, they experience themselves. So that typically gives founders a much, much bigger clarity in terms of what they're trying to solve. A couple of questions. And this is probably some questions. I encourage you to infer feedback on the deck as well from my questions. So first of all, you mentioned style guidance as a differentiator here, but it's not clear to me, what does this mean in practice? Is it AI supporting your customers? Is it a personal style editor supporting? Is it kind of a submission, kind of subscription base where people get style references, not personalized, but in general, what's trendy? So what does style guidance mean specifically if I'm a customer?
At this point in time, style guidance would be through the videos and pictures that we would have on the website, that you can pair this accessory with this outfit, or this particular pair of shoes with this dress. But going forward, of course, the idea is to integrate AI into fashion, because I think that's the next big thing expected in fashion in India. And India, being the market that it is a very perfect market for tech in fashion industry.
Okay, so style guidance means more trend references that are provided to your customers and connect them and inspire them to get some of the looks through your service. That's clear.
As well as Instagram, for example. There are a lot of videos that, yeah.
Perfect. I think definitely there's an opportunity there for AI, for more personalized references. Even today, it costs virtually nothing to get a little chat bot on your website where people kind of dump their preferences and what they like to wear, what they don't, information about themselves, and they get kind of style references from there. Okay, understood, clear. My second question, also based on some information that I would have liked to see on the slide. Your SOM target in 5 years is 80 million. I love it. However, your 12-month, so in 1 year, your revenue target is roughly, if I did the math right, $14,000. So help me understand how you're connecting $14,000 in the first year to 80 million over the 4 that follow.
So initially, the scaling is where the challenge lies, right? It's in the initial 6 to 12 months, after which it sort of catches on and it's a trend, becomes extremely popular, backed by digital advertising. So the kind of scaling that takes place after the first 12 months is not necessarily a multiple of what happens in the first 12 months. It scales at 10x, 100x, 1000x. And that's the kind of trend that's been followed by some of the online e-commerce companies that launched in India. Nykaa, for example, today is valued at $1 billion. Tira has just been launched by one of the biggest business families in the world and in India as well, which is Ambani's. Reliance Industries Limited. So the kind of scaling that takes place in the online fashion business is not necessarily proportional and follows a particular formula.
I understand. Competition is high, but it can also be a reference. Okay. You follow up. You mentioned the scaling in some of these competitors, other brands already doing it. I agree. There's opportunities there. For this first year, in which you're expected, I think it was revenue, not profit, so revenue of $14,000. What do you expect your CAC to be and your LTV as well? But what do you expect? Yeah, go ahead. Sorry.
No, this is something that I'll have to sort of study and come back to you. I don't really have.
Okay. Just trying to understand, out of that 14,000, how much goes to customer acquisition and what the lifetime value is you get from the customers from that. But that's okay. What else? Are you planning on using, I'm not too aware of the Indian social scene. That's my ignorance, apologies. But what's the market there around KOLs, influencers? And if that's a realistic path for you, I imagine brands like Myntra and Nykaa, they have more access and reach through that. So one, is that a credible funnel for you to use, KOLs and influencers? And if so, how do you plan on cracking a market that, if it's there, I imagine these bigger brands already dominate?
Yeah, absolutely. So any market which has a high population base, which India does, is very big on social media, and influencers have a huge impact here, especially with, I think it cuts across age group. It's definitely not the younger age group. And but I think the nano influencers, so there are the tiers, right? There are the macro influencers, the micro influencers, the nano influencers. I think the nano influencers have a huge impact in the last 12, 24 months. The trend has been that the nano influencers are being followed as aggressively as the macro influencers, and those come at a reasonable price point. And I think that would be my route to begin with, because you're right. Okay, competing with the marketing spends of the top two players would be, fairly challenging in the beginning. It would definitely be a route, but maybe I would begin with nano and micro influencers, and to add value to the campaign in the initial few months.
Okay, clear. This is information that is important because if I remember, on your slide you mentioned what I think 40% of the 200K are going towards acquisition. So it's important to understand how to justify the 200K. If 40% of that is going to marketing and acquisition, it's important to understand what the customer acquisition cost is, so you can say exactly kind of what the path is to getting ROI from all this money that's going into acquiring customers. But this is a technicality. I'm sure you can get to it later on. One last thing about, but this could be for everybody, so I can leave this for the final remarks. So for at this stage, thank you so much, Shama, for clearly you speak with the clarity of somebody who is solving their own problem as a user in an ecosystem. So that kind of clarity comes rarely, and it was refreshing to say the least. So
you got that right. Thank you.
Thank you so much, Shama. Stay, don't go, because we're bringing all back now. Starting from Vincent. Where is Vincent? Okay, meanwhile we wait for Vincent. Marcelo, actually, here we are. Vincent, 10, 20 seconds to convince Nelson to invest. Why you should give the money? Or any investors watching today.
Well, Africa is the world's youngest continent. I think an average age about 19.5 years. And so we are the world's working force. And we have a lot of potential to offer the world. It's just that building in Africa is expensive. And so that's what we're trying to solve, just that cost of capital. If we can bring down the cost of capital systematically, then we're going to experience more inflows because right now a lot of money is going to the other continents. But as soon as it becomes cheaper to build here, then yeah, we solve the problem on a massive scale.
Thank you so much, Vince.
Thank you.
Marcelo,
Thank you.
you're
Marcelo,
muted.
you're muted.
You're muted.
Sorry.
There
I
you
didn't
go.
want to serve the other guys. We are solving a real problem in a huge market with a competent team. We executed the project in only 5 months with Azul, and we succeed over our competitors. Bags was acquired by $278 million in 2018. So we have plenty of room to grow. Go-to-market is fast, scale by airport and port. So thank you. Let's travel together, Nelson.
Thank you, Marcelo. Marco,
In Neurality, we take visual automation very seriously. We are in a world where our competitors, of course, are trying to get as many clients as they can, but I can assure you that 100% of our customers previously talk to our competitors before founding their solution in Neurality. So we invite you to join our revolution to eliminate the industrial waste and claim the future of automation industry by backing Neurality mission to install an infallible AI eye on every production line across the globe.
thank you so much, Marco. Shama, please.
Thank you. So India is at the brink of an online revolution, and it's growing every year on year in leaps and bounds. And I am definitely going to turn this around. So you can bet on me. Come join me in building Aurora Life.
Thank you so much, Shama. Awesome. First of all, thank you so much for being with us. It's been a very great session with a very good and insightful questions. If you want to give I don't know, the last recommendation or advice
Yes.
to all the funders.
Yes. Two trends I noticed across all pitches. So let me focus on that so everybody gets some value here. First of all, really, I understand the asks you're making money-wise. It would have been interesting to spend maybe 5 or 10 seconds also explaining the value exchange dynamics behind the ask. What I mean to say is, I need 200K in exchange for what? Equity in my company? If yes, how much? Am I looking for a loan? If a loan, is it a loan over a period of time plus interest? Or is it a loan until you get 2x your money back? Is it a loan that if I don't pay back in 5 years, you get equity or options into the company? Or is it straight money for equity and we're in this together? So it's the ask is very clear. It's also interesting to explain what you're giving back, because then the incentive is that I want you to do well because I want to make twice the money I gave you, or we're locked in for 7 years where I have equity in your company. So the higher you go, the higher we all go together. So it would be interesting to include, I want this amount of money in exchange for this amount of equity at this current valuation. Yes. And obviously, if anybody here is pre-seed or even seed, the valuations are flexible. Okay. Don't be afraid to explain and defend your math, but be ready to defend it. But that part I think was missing. Another part that I think is very of the current zeitgeist of the times we're in is the fact that AI is bringing the costs of building anything to near zero. Like most founders are still basing their valuations and basing their asks on high burn, teams with a lot of people, on high cost of integration with customers. Sorry, can you hear the dog?
That's fine.
Hey, Yago, come here. Sorry, it's my intern. Sorry, just a minute.
We love dogs. That's totally fine. Let's wait for Nelson coming back.
Yeah, sure.
Meanwhile, we wait for Nelson coming back.
So
Here we are.
so to summarize, AI is bringing the costs of building anything to near zero. It's okay. So a lot of founders are still basing their asks on what it used to cost to build a team, to acquire customers, to buy software. And what a lot of investors are looking to find is the current ask already adjusted to the lowering of the costs brought by AI? Yes. So also, a lot of investors are not making the checks back from their investments made 5 or 7 years ago, which meaning not a lot of B or C series startups are buying their equity back. So they don't have a lot of liquidity to put big checks into companies. So what you see a lot of them doing is smaller checks across more companies. So what I'm trying to say is, in general, ask for less money. But if that's not an option, then at least explain in your deck how your ask is already adjusted to an AI building era. Okay, so we're asking for this amount of money because we're automating as much as possible. We're not hiring as many people as necessary. We're leveraging AI tools for a better customer acquisition. So explain how AI is integrated into your business, and this will also help investors be more interested, because then if not, they don't know if you're leveraging AI to ask for less money, or if you're still asking for this amount of money before considering using AI. So just consider that into your asks. But in general, I see founders asking for a lot less money when they deploy AI into their operations, and that makes investors way more interested. Yes. As a little tip for US founders, don't tell any investor I told you this, but if you're lowering the amount of money that you're asking for, also rethink the amount of equity you're willing to give. Investors will look at the money they give you as leverage, and they will fight for pre-AI equity at post-AI money. If you're bringing your ask to post-AI money, also bring your negotiation of equity, and don't give more than necessary for the updated cost of what you're asking. Mm-hmm. So exactly. That's just a little tip. If you tell anybody I told you this, I will deny it.
Thank you so much, Nelson,
Absolutely.
Marco, Marcelo, Vince, and Shad. Thank you so much for coming today. It's been a beautiful session, and whoever wants to come to pitch, send your deck to pitch@equitymatch.com. I will welcome you. Thank you again, and have a good evening or morning wherever you are.
Thank you so much. Amazing job, everybody. You inspired me today.
Bye-bye. Thank you. Bye.